to attempt the question. So we're going to be starting with question number 1. But before we actually start with the revision, is there anyone who have got any question? Anyone with a question? Please recording the lesson, so I will upload it later on, and the link will be available in Call Campus by tomorrow morning. So any questions? Okay, in absence of questions, I'm going to share my screen and then we're going to start with the workings. So I'm going to be using the whiteboard. That you can actually see my screen. Can I just see the thumbs up if you can actually see my screen? All right, thank you very much. Okay, the first question on the practice test, it reads as follows. The following 3 case studies all relates to financial results from regular sales week versus clearance sales week for 3 competing firms. Ignore VAT. Average resulting for a normal sales week. We've got business A, B, and C. And the required is that which one of the 3 business has the highest net profit in rands during the normal sales week. So you are given the following information: the selling price for each and every business, the cost price per unit for each and every business, the number of units for each and every business, as well as the weekly overhead expense. So to answer this question, you have to follow the income statement format. Do not draw this without the income statement format. As you are aware that once we talk about net profit, gross profit, under unit number 4, we covered the income statement format as well as the elements of the income statement. So if you calculate this without using the income statement, you might actually get to lose some marks, and that will actually be bad on your side because you will need those marks to actually get much better results. So to answer the first question, we are going to apply the income statement approach because we're being requested to calculate the net profits in rands value. So since it says in rands value, so this part over here in rands value, so meaning that every item that we're going to calculate needs to be in total value of rands, not just only per unit, but in total cost. So for example, I'm going to start with business number A. So when we solve for business number A, we're going to use the income statement format. So we're going to need sales. We're going to need cost of sales. So we're going to need cost of sales. And then we're going to also have gross profit. And then we're going to have overhead expense or expenses. And then after that, we're going to have net profit. So it says ignore VAT. Okay, my whiteboard is just a bit refreshing, so I hope it's okay, it's back. So ignore VAT, meaning that we won't have tax at all when we're calculating our net profit, and since we don't have any tax calculation or tax rate, therefore we skip the tax, we skip the interest rate. We only work with the information provided. So like I did mention, this kind of structured scenario, it's something that you will be looking at in terms of your examination. So you'll get to receive similar question with similar structure. So I'm just gonna move this one over here a bit. So if you have got your paper next to you, you'll just be correcting yourself as well as modifying your final figures that you wrote on your answer books, the ones who have got the answer books. If you have got a question, please raise your hand and I'll be able to assist you and you can ask your question. If you don't want to use the microphone, then you can actually just use the chat section. I will go and read your comment and answer it for you. So on the sales part, so since you have got the selling price and the number of units sold, so selling price is equal to sales is equal to selling price multiplied by the number of units sold. So this means that here it's going to be 400 multiplied by 142 units. So this will then give us our sales price. And then for cost of sales, it's your cost price per unit. How much did it actually cost you to produce 1 unit, or how much did you actually buy 1 unit for before you actually sell it? So that will be your cost of sales. So under this scenario, cost of sales for business A, it's going to be 200 multiplied by 142, and then this will give us the cost of sales. And then after that, we can calculate our gross profit. And then for overhead expense, this is equals to, I'll put this one in brackets, 18,500. So here we've got the following information that is already provided for business number A. So then now we can use our calculator to calculate the net profit for business number A. So also when you're going to answer this in the examination, if you are required to calculate the net profit or gross profit, make sure that you follow the income statement format. Do not just calculate it separately as workings, but please show the format of the income statement when calculating net profit or gross profit. So in this case, our sales is going to be 400 multiplied by 142 units that was actually sold. So this means that we have got a total sales of 56,800. So here we're going to have 56,800 as the total sales. Then we then calculate the cost of sales, which is 200 Rand cost per unit multiplied by number of units sold. That will be 28,400. So I'm going to explain this. I hope you note it down. So in some scenario, you might actually have to calculate the purchase and the cost of sales are two different things. Cost of sales, it's based on number of units that are sold, and then purchases is based on the number of units that you actually bought. So if you had to calculate cost of sales and they told you that you bought 142 units and then you sold 100 units. So your cost of sales will be based on number of units you sold, not on the number of units you purchased. So I'm going to put this one in brackets since it's an expense and we're going to be subtracting it from our sales. Then we can calculate our gross profit. So your gross profit is equal to sales minus cost of sales. So gross profit 56,800 minus 28,400. And then this also gives us 28,400. So gross profit is the same as cost of sales. which we calculated by saying 56,800 minus 28,400. We get the gross profit being 28,400. And then minus the overhead expense, then we're going to get the net profit. So our overhead expense is already given as a total amount in rents value. So we can then just go and subtract it and from our gross profit, which is going to say 28,400 minus 18,500. So you get the net profit being 9,900. So did you guys get the same answer as the one on the screen? All right, then we can move to number B. Business B. So the reason I'm explaining about the format, it's because I know that some of you went and say 1,500 minus 1,000 and then multiplied by 75 minus 21,000. So your calculation is still correct, but in this question, you'll find that the mark allocation for this question is something like 15 marks. I'm just going to make an example that an assumption or an example that marks allocation is 15 marks. So if you went and go and just do that and the marks are being allocated based on sales, based on cost of sales value, based on gross profit value, based on overhead expense value, based on net profit value, then you're actually going to lose marks on the sales value, cost of sales value, and then you're only going to get marks on the gross profit value if you do show the gross profit value. But if you do not go and show it and you go and say this is equals to 1,500 minus 1,000 multiplied by 75 minus 21,000, and then you come and say this is equals to 4,000. I'm just giving an example. So on your scenario or on your final answer, there is no sales value, there is no cost of sales value, there is no gross profit value, there is only overhead expense, which is a given amount, and then your net profit as well. So this means that you have lost 1, 2, 3 marks, and then you're only going to get the 4th mark. So normally, which means that if this was the mark allocation, this will have 12 marks. So which means that you've already lost all of these marks. And then your final figure is correct, then you're going to get a mark on the final figure. So remember everything, the question will tell you under which section does this question falls. If this follows under the financial statement section, which is the income statement section, use the income statement approach. If it falls under the cost, chapter number 6, costing and pricing, then you can use this approach over here, because the costing and pricing does not require you to calculate or to use the income statement. But section if it says this section is based on chapter number 4, which is financial statement, therefore you need to make sure that you use this format of the income statement so that you don't get to lose any marks. So I'm going to erase so I'm just going to erase this and then we follow the format. So please be noting down most of the things that I'm saying for those who are not going to rewatch the recording. So sales, cost of sales, gross profit, overhead expense, and net profit. So for sales, it's going to be 1,500 multiplied by 75 units sold, Cost of sales is going to be 1,000 Rand cost per unit multiplied by the number of units sold, 75. And then we're going to have some values over here and then another value over here, which is going to be in brackets. And then we're going to have our gross profit and then overhead expenses. It's 21,000. So this gives us 11,500. Sorry about the movement. I think my laptop have just jammed a bit. Okay, 11,500. So I'll just reconfirm this figure as well. So we've got 1,500 multiplied by 75 units. So the figure is actually incorrect, the one that I just wrote now. So I've got 1,500 multiplied by 75 units. So that's actually 112,500. 112,500. And then we calculate the cost of sales. So cost of sales will be 1,000 multiplied by 75 units. That's 75,000. And then from this point, we calculate our gross profit. What is the gross profit? So that's going to be 112,500, which is your total sales, minus your cost of sales, which is 75,000 units. This will then give you a gross profit of 37,500. Minus the overhead expense. Then this will then give you your net profit. So minus this one, we're going to have 16,500. So can I say by a raise of thumbs up, those who got the same amount? All right, thank you very much. Then this means that now we can complete for business number C. So here we're gonna have sales and then cost of sales, gross profit, and then overhead expense. And then we're gonna have the net profit. So cost of sales or sales, it's 8,000 Rand multiplied by 15 units. Cost of sales, it's 4,500 multiplied by 15 units sold. So here we've got 40,000 as overhead expenses. Then we can calculate our sales value to be 8,000 multiplied by 15 units. 8,000 multiplied by 15 units, that's 120,000. And then the cost of sales, 4,500 multiplied by 15 units, that's 67,500. And then we calculate our gross profit. So that's 120,000 minus 67,500. Then you get your gross profit to be 52,500. So gross profit 52,000 minus overhead expense of 40,000, will be left with a net profit of 12,500. So how many of you managed to say amount? Okay, so your final figure or your final say, it says which of the three business has the highest net profit in rands value during the normal sales week. So your final thing is supposed to say that business B has the highest net profit in rands value during normal week. So this is supposed to be your final statement because it asks you which one of the three business has the highest net profit. So if you just perform the calculation, you will earn all the marks for calculation, but you will not actually get to receive the marks for the final answer. So this means that even if all of those are correct and you got everything correct, if the question have got 12 marks or 13 marks, this means that you lose that 1 mark for commenting of saying that this is the business that have got the highest net profit, or this is the company that is having the highest gross profit. So in your assessment, you can be asked either gross profit or either net operating profit or either net profit. So I will repeat this based on the section which the question is. If the question is on section of financial statement, use the income statement. If it's on a different section that does not relate to financial statement, then you are not actually fully required to use the financial statement format. You can use any other format that you prefer. But if it is within the section of financial statement, then make sure that you use the income statement approach. So any questions regarding question number 1? No questions. Okay, let's move to number 2, which is the cash budget, the one that holds a lot of marks for you guys during your assessment. Can you all see my information properly? All right, question number 2, like I did mention during class, that your focus or your most for you to be able to achieve better results on this topic, which is chapter number, I think it's chapter number 5, working capital and cash management. So we are focusing on cash management, which is the cash budget. So you need to be able to understand how to calculate the debtors collection schedule as well as payment schedule. And then lastly, preparing the cash budget. That is the most important thing that you need to be able to achieve on this topic. So I'm going to read the scenario with you guys, and then after that we're going to attempt to complete everything that is here. So in assessment, here's the trick. So for each of this line, for example, you will be required to calculate cash sales, credit sales, and then after the credit sales, you'll then do the collection for that credit sales based on the month that we are budgeting for. So 1 mark, and then maybe 1 mark for all of these collections. So you might find that here marks is 3 allocation. So it is very important that you make sure that when you do your collection, you do it correctly. But I will also try to be lenient when I'm doing the marking, because I know some few mistakes or error can be made. But if I found that most of your amount are wrong, but the last one is incorrect, maybe you used a wrong calculation or maybe you made an error. So I would be able to pick up if you made an error if the rest are correct. But if one is incorrect and only one is correct and then the other is incorrect, then that will not be an error. So that will not be classified as an error. So it will just be an incorrect figure. So let's start with the cash budget. So here it says that you are required to develop a financial management budget for Blossom Media Incorporated in line with the information provided below to track all the income and expenses for the business to determine if the business will be expected a surplus or a shortfall in cash. So the main aim of preparing a budget is to forecast future goals and see if the company will have a surplus or a shortfall. And some of the other importance include that budget allows the company to be able to plan. It also motivates employees, and it also allows for coordination of coordination within the department or within the organization so that everything can run smoothly. So that are some of the things that the why the budget is actually important. So here it says that the prior year balance for the following accounts are below. So we've got a bank balance at the beginning of the year, which is favorable, 56,000. And then furniture balance, we've got 30,000. Debtors, 125,000. Creditors, 84,000. So these are opening balances on the financial statement. So your statement of balance sheet have shown all of these balance. And then they told you that the budgeted total sales amount to 2,250,000, which 25% sold during January, 35% during February, and the remaining amount in March. Previous month credit sales for the prior 3 months are as follows: October 160,000, November 195,000, December 215. So these are credit sales amount, not total sales, but credit sales for this specific month. And we're also told that the cash sales, so the 50% of the total sales are on credit. So meaning that these are 50% of November, October, November, December, total sales. And therefore, this 50% equals to 215. This means that also the cash sales for December will actually be 215 because it's 50-50. So this is something that you need to be able to think of when you are writing your assessment. To say that if 50% of total sales are on credit, this means that 50% which is credit and 50% which is cash sales will all be the same amounts. So meaning that if you were to calculate the December total sales, this means that you're just going to multiply this by 2 or just add 215 on the December credit sales to get the total sales. And then it continued to say that debtors are expected to pay according to the following schedule: 60% in the month following the month of sales, 25% in the second month following the month of sales, 10% in the third month following the month of sales, and 2% is written off as irrecoverable. So I always say that once you see this, ignore this percentage over here. Just cancel it out so that you do not get to work with it, because this is a non-cash item. This is your bad debts. It gets only to be included in the income statement, but not in the cash budget. And then it says that your purchases are expected to be 55% of total monthly sales. So this statement over here, purchases are expected to be 55% of total monthly sales for each month. 50% of all purchases are on credit, and the creditors are paid in the month after the purchase. So here we need to calculate the purchases, which the purchases is 55% of total monthly sales. So meaning that if we're taking a look at January, the total sales of January, 55% of it is equal to purchases. And out of that purchases of 55% worth, 50% of it it's credit purchase, and the other 50% it's cash. It's cash purchases, and the other it's credit purchase. It says that there are 4 staff members and the salary paid to each person amount to 25,000. The income tax payable to SARS amount to 110,000 and must be paid at the end of March 2023. A new delivery vehicle was purchased on sales. The agreed loan amount for the value is 630,000, including interest, and it will be paid back in equal installment over 5 years. So you are required to prepare the debtors collection and creditors payment schedule for Media Incorporated for the first quarter of 2023. So we need to calculate this information over here and fill in all this information. So also on your assessment, you will get as well to, you will be presented with a format. You don't have to draft the format from scratch. You will be presented with a format, but you will have to know what information needs to be filled. So starting with this information over here, so we've got the debtors collection schedule, which you are supposed to fill in the cash sales, the credit sales, the January information collection, the February collection, and the March collection. So we're going to start with 1 month at a time. So based on our information, we're given that under the debtors collection or under our credit sales, we've got the following credit sales that have been made. So these have been the credit sales for the prior 3 months, which is October, November, December. So these are the ones that we start with. So here we're gonna then have October, November, December, and then we include the one that we are budgeting for. So now the question comes in, what is the cash sales for the month of October? So it says that 50% of total sales are on credit. So on October, we've got credit sales of 160. So which means that cash sales will also be 160,000. And then credit sales 160,000. Because if credit sales is 50% and sales is 50 and cash sales is 50%, this means that the amount will be the same. So if you want to solve for this, you can go and solve for this and say X multiplied by 50% or 50 out of 100. It's supposed to be equals to 160. So once you have got the 160, we are trying to get X. So X is equals or its total sales. So which means that now we need to solve for x. And to solve for x, this means that we need to move this to the other side. So this means that x will therefore be equals to 50 multiplied by 100. So to cancel this, we're going to come and say multiplied by 100 divided by 50. And then 160 multiplied by 100 divided by 50. So this will cancel this and this will cancel this. So that's how you work it around, or you can just do cross multiplication and then you'll come back to this same final figure. Therefore, x is equals to 160,000 multiplied by 100 divided by 50, which 100 divided by 50 is 2. So this means that 2 multiplied by 160. Then that will give you your final answer, which is x is equals to 320,000. So this means that the total sales for October is 320,000, and therefore cash sales it's 50%. If you calculate 50%, it takes you back to 160,000. So I'm saying this because when you calculate the purchases, you're going to need the total sales, especially for the one for December. So you need to be able to know how it came into existence or how to calculate it. So let's go back to our scenario. So I'm going to erase this. We are doing the collection for January, February, and March, but we start with October. So with October credit sales, so I'm going to do 1 month at a time. So with October credit sales, the information that we do have so the information says that 60% of credit sales will be collected in the month following the month of sales. So this means that if we sold 160,000 worth of stock, 60% of this amount will be collected a month after, which means that if we make these sales on October, we're going to start collecting in November. So that will be 60%. But on our budgeted period, we do not have November. So we're going to skip the November percentage for October month. And then on the same month of October from these credit sales, 25% of it will be collected in the second month following the month of sales. So second month following the month of sales, it's December. So this means that for this October credit sales, 25% of it is collected in December, and we are not budgeting for the December month. So this means that we skip that one as well for October. And then we move towards the 10%. So the 10% over here indicates that 10% in the third month following the month of sales. So this means that if we make sales or we sold goods on credit for 160,000 in October, 10% of that amount will be collected in the third month after October, which is which means when we count, it's going to say November, December, January. So this means that 10% of October sales will be collected in January. So this means that here under this portion over here, you are going to then go and say 160,000 multiplied by 10%. So this will actually give you 16,000, and then you're gonna put the dashes over here. So here the marks will be allocated based on how many calculations did you perform per month. So the marks here are not going to be fixed, like to say 3, 3, 3, 3, 3. Nope. The marks will be allocated based on which month did you have to do a lot of calculations. Then coming to the month of November. Month of November, it says that the previous credit sales for the prior 3 months, November 195,000. So here on credit sales, we've got 195,000. So which means that to get the case sales will be the same as the case sales will actually be the same as the credit sales because they are both 50-50 of the total sales. So if you want total sales, you can just add the two. Then comes the collection of January, February, March. So with the collection of January, February, March, 60%, we start with the 60%. So since we sold 195,000 goods on credit, 60% of it will be collected in the following month, which is December, and we do not have December in this case. Therefore, we move to the next coming month. So which the next coming month, it says that 25% in the second month following the month of sales, which means that second month from November, it's January. So this means that in January, we're going to collect 25% of 195,000. So it's going to be 195,000 multiplied by 25%. So this amount will actually come over here. So I'm going to use my calculator. So 195,000 multiplied by 25%, that's 48,750. So here we've got 48,000. $750, and then we move to the last collection for the November month. The last collection is 10% in the third month following the month of sales. So the third month after November sales, which means that it's going to say December, January, February. So this means that 10% will be collected in February, which is actually going to be 19,500, and then we put a dash. And then in this case, then we then move to December. But before we move into December, did you guys manage to get the same amount as the one that I'm writing? Okay, thank you for the confirmations. And then December, you're going to have 215. So which is going to be the same as your case sales. So here's a hint in terms of your assessment. On your assessment, the case sales and the credit sales, you'll have to calculate them. So this one, you'll have to calculate them. For both months, you'll have to calculate them. They will not be given. And if you remember something I mentioned during class, when we're doing the cash budget, you need to familiarize yourself with that calculation, where I once talked about the discount. So please make sure you familiarize yourself with that as a hint. So let's move forward. Then we've got the December month. So on the December month, we've got a credit sales of 215, which 60% of it will be collected in the following month, which is January. So this means that this is the first time we are collecting our first collection for the month after the month of sales, which is the month following the month of sales. So this means that after this, we are going to apply that method that I showed you in class. So we're going to say 215 multiplied by 60%, that's 129. So which means that here you're going to have 129,000. After the 129,000, we then collect 25% in the month after the month of sales. That's 53,750. And then 10% of this will actually be 21,500. So because on this month you have collected everything, you come to the scenario, are we collecting within the same month? If you are not collecting within the same month, like here on the scenario, it says that 60% in the month following the month of sales. So this means that if we made sales during the month of January, we do not collect in that month. So this means that here for January, you're going to put a dash, and then here for February, you're going to put a dash, and then here for March, you're going to put a dash. So because of this month, we are not going to collect. And now you repeat your pattern. So meaning that it's going to be 60%, here it's going to be 25%, here it's going to be 60%. So that's the pattern that you're going to follow. This just means that over this portion over here, we're not going to have any amounts. And then we can then calculate the January sales. So to calculate the January sales, I'm going to erase this over here. So January sales, it's going to be equaling to the total sales which has been budgeted of 2,250,000. All of this will be multiplied by 25%. This will then give us the total January sales. So that's 2,250,000 multiplied by 25%. That's going to be 562,500. So here we then have 562,500. So this is actually the total sales for January. With the total sales of January being 562,500, then you can calculate the cash sales and credit sales. So meaning that cash sales, it's going to be 562,500 multiplied by 50%. So which is going to be 281,250. So that means that also our credit sales will be 281,250. Did you guys get the same? All right, so since you got the same, then you will complete here and calculate 60%. And then here you're going to calculate 25% of the amount. Here you're going to calculate 60% of the amount. So for budgeted total sales for February, you're going to say 2,250,000 multiplied by 35%. This will give you 787,500. So February, it's equal to 787,500. And then you just divide this by 2. This will give you the cash sales and the credit sales, or multiply it by 50%. And then for March, it says that the remaining is for March. So meaning that we need to go and say 25 was collected for February, plus 35 for February. That gives us 60%. So this means that 40% have not been allocated, which means that it's going to be allocated to March, because they say the remaining is for March. So this means that from the 2,250,000, March sales will be 900,000. So this means that here we're going to then have 450 and then here 450. So just let me know, guys. I'm not gonna finish off the debtors. I just want to know if you managed to get the same figures. Did you manage to get the same figures? Guys, did you manage to get the same figures? All right, thank you very much. So this brings us now to creditors payment. So creditors payment, I'm going to do creditors payment. After that, we'll just finish off with the last part, which on the last part, I'm just going to explain some few things and tricks that, but there are no tricks, it's just that there are things that you need to be aware of and how to explain them. So here on the creditors payment schedule, you look for information on your cash budget that is talking about purchases. All the time, look for information that is talking about purchases. What is the purchases? So here it says that purchases are expected to be 55% of total monthly sales for each month. And then 50% of all the purchases are on credit, and the creditors are paid in the month after the purchases. So this means that since we're preparing for January, February, and March, and here the information says 50% of purchases are on credit and creditors are paid in the month after. So this means that if we buy on January, 50% will be cash purchase, and then 50% will be credit purchase, and that credit purchase will actually be paid in February. So this means that if we were to look at the information that we have, we've got credit sales from October, November, December, which are for the previous month, but which one of these are we going to collect within the budgeted period of January, February, March? Since it's only 1 month in arrears, this means that the only one that we're going to collect is for December, because it's 1 month before January. So which means that whatever we bought in December will therefore be paid in January. And the rest will not be included because whatever we bought in November, the credit purchase of that was paid in December. And the one for October, the credit purchase was paid in November. So this means that over here, when you calculate the cash purchase and the credit purchase, we are going to say that for December, so December month, we first need total sales. What is the total sales for December? So 50% of credit sales, credit sales is 50% of total sales. This means that sales is 2 times the credit sales of December. So this means that it's going to be 212. So 215,000 multiplied by 2, then this will actually give you 430. So this is the total sales. So once you have got the total sales, it says that purchases are expected to be 55% of sales of each month. So this is the sales for December. So we need to calculate the credit. So we need to calculate the purchases. So for the purchases, it's going to then say 430,000 multiplied by 55%, which is the 55% of the monthly sales, where the monthly sale is 430 for December month. So this means that the total purchase for December equals to 430,000 multiplied by 55%. So that's 236,500. So this is the total purchases. then it says 50% of all purchases are on credit. So which means that 50% of this amount, so December credit purchase, December credit purchase will equal to 236,500, which is the total purchase multiplied by 50%. So that will be 118,250. 118,250. So this is going to be the credit purchase, 118,250, same as the cash purchase for the December month. So did you all manage to get the same amount? So from this amount, it says that 50% of all the purchases on credit, creditors are paid in the month following the month of purchase. So meaning that for credit purchase that is made on December will be paid in January. The whole 118 will be paid in January, and therefore here we do not have the amounts. And then for the January, we're just going to take that total January sales of 562. The 562,500, multiply this by 55% to get the total purchases for January. So it gives us the total purchases. So this means that if we say 562,500 multiplied by 55%, that's 309,375. 309,375. Then we need to split this into two to get the January cash purchase and credit purchase, which is 50% each. So this means that on our final figure, we just divide this by 2. We then get 154,687. And then which means that the one for January will be then collected in February, the credit purchase of it, which is 154,687. So did you guys also get the same figure as well for January?
So please start again.
For which month?
For Jan.
For January. Right. I'm just going to erase some calculations over here. Okay, January. So January, we need the total sales. So total sales, I'll just write total sales. It equals to 562,500. Purchases of January, it equals to 562,500 multiplied by 55%. So the reason we're doing this is because it says that purchases are expected to be 55% of the total monthly sales for each month. So the sales for January, it's 562,500. So to calculate the purchases of that month, we need 55% of the sales of January. So this means that the purchases for January, it's actually going to be 562,500 multiplied by 55%. So I'm just converting the 55% into decimal. So that will give us 309, 370. Sorry about this. So that will give us 309,375 francs. So this is the total purchase for January. So to calculate the credit sales, therefore credit sales will be 309,375 multiplied by 50%, where the 50% is for the credit sales, which is calculated on the total purchase. So credit sales for January will therefore be this multiplied by 50 divided by 100, giving you 154,688. So to round this off will be 688,000. So this is the credit sales. So you're gonna come and include it here and say credit sales, it's 154,688, and cash purchases will be the same because it's 50% of the total purchases. So which means that you no longer have to calculate it because you already calculated the 50% of that total purchase, which is 154,688. Then the question comes in to say, here it says creditors are paid in month after the purchase. So this means that whatever we purchased on credit in the month of January will therefore be paid in the following month, which is going to be February. So this means that here we're going to have 154,688 in February being paid to the supplier. So please correct the dates over here. It's supposed to say 33, not 2022. It's supposed to say 2023. I'm just noticing that now, so please correct that on that note, on those headings. So did I manage to make it easy for you to understand?
Yes.
All right, and then for the month of February, you are going to do the same. So for the month of February, so for the month of Feb, you're gonna need the total sales for February, which is actually equals to 787,500. So which means that the purchases for February is equal to 787,500 multiplied by 55%. This will then give you the total purchase for February. So we're gonna use our calculator. So we then have the total purchase being 433,125 rand. 433,125 rand. So this is the total purchase for February. And therefore, to calculate the credit sales, it will be the 433,125 multiplied by 50%. So this means that credit sales is going to be 216,000 562, or if we round it off to say 63. So this means that here you are going to then have case sales of 216, 563, 216, 563. And then this February credit sales that you bought here, whatever you bought on credit on January, you are then going to pay it off in February, sorry. You are going to pay it then in February, sorry, in March, since you put it in February. So you're going to pay it in March, which is going to be 216, 563. So for this month of March, you just only need to calculate the value over here and the value over here, and then here there's not going to be any collections, because whatever you bought in March on credit will be paid in April, and you are not forecasting for April. So this means that here you are not going to show any collection for that month except the cash and the credit purchase. So did you manage to get everything right on your practice test on this section? Can I see by thumbs up those who managed to get everything right? All right, thank you for that. Then this then brings us to this section over here. So I'm going to switch the screen. I'm gonna go to my Word document. So over here on the last section, you were given the following standardized financial statement of Missing Ltd, where you are given the statement of financial position, which is your balance sheet statement. You are also given the statement of comprehensive income, and then additional information, plus ignore the additional information at this stage. You will not be required to use it. Then it says you are required to calculate the gross profit margin. So the formula to calculate the gross profit margin, it's equals to gross profit over sales multiplied by 100%. So gross profit, net profit, return on equity, or return on average owner's equity, they are all in percentage format. So this means that your final amount should be in percentage format. Do not leave your amount as 0.5. Make sure that you write it as 50%. So this is the formula for gross profit. So with this formula, then you are going to look for gross profit on your financial statement. Gross profit is 80,000. So which means that this side you're gonna come and say 80,000 divide by the total sales. So total sales is 150,000. So the word turnover represents revenue or total sales. So here we don't normally use just the word sales. It can be turnover, it can be revenue, it can be sales. So whatever the financial statement is representing on the position of sales, that's the amount you are supposed to use. So it's either they say revenue, or they say sales, or they say turnover. So all of those will actually be one thing on your assessment. So just use that as a denominator on your formula. So here we've got 150,000, and then multiply this by 100%. So we can then use your calculator to calculate how much is gross profit. So gross profit 80,000 divided by 150. So that's 53%. So that's going to be 53.33%. So that is going to be a final answer for gross profit margin. So in the examination, you will be required to calculate these things. these ratios. While you are calculating them, you might also be required to explain what does the 53% actually means. So meaning that you will need to explain that the profit that the company have made after contribution by cost of sales is 53% of the total revenue or total turnover or total sales. So that will be your explanation on this point. And then what also you might be required to explain, what does gross profit measure? If we are calculating gross profit, what does it actually measure? So you also need to explain what gross profit margin measure. So gross profit margin measures the profit that have been realized by the company after contribution by cost of sales. So that's what you are going to explain, to say that we are trying to calculate how much profit have the company realized after contribution by cost of sales. So cost of sale helps us contribute this total revenue or this total sales. Then if this is how much cost of sales have, this is how much we have incurred towards cost of sales, then how much profit did we realize after this contribution by this expense? Then that will be a profit for gross profit. That will be the realized profit after cost of sales contribution. Then for net profit.
Sir?
Yes?
Please explain the 53% explanation again.
The 53%, it's this is the profit percentage realized after contribution of cost of sales. So it is the same explanation you give as defining what gross profit margin measures. But this time around, you are defining it in a matter of percentage format to say that the profit percentage that have been realized after contribution by cost of sales is 53.3% of total sales. So I will not be able to re-explain the same way I explained, because when I'm talking then, but the explanation is still going to be the same, to say that the total profit percentage realized is 53.3% after contribution by cost of sales to total sales generated. So that is the realized profit. So the realized profit after contribution by cost of sales, it's 53.33% of total sales. So this means that the difference out of the 100% of revenue generated, 53% of that total revenue generated is the realized profit after cost of sales. So that's what it actually just means in simple terms. Sorted?
Yes.
All right. Net profit, it's a net profit over turnover, or you can just call this sales multiplied by 100%. So your final figure will be in percentage format. So what you just do, you go to your income statement, take your net profit. So this is retained earnings, not net profit. So here your net profit is actually profit after tax. So this over here can also be known as profit after tax. So net profit, it's profit after tax. Just note that down, that net profit, it's also known as net profit after tax. So that will be a net profit or a profit after tax divided by sales, or other divided by turnover. And then you calculate. So this one are much easier. So the one that I want to focus on is here's the last one. I want us to focus on the acid test ratio. So the acid test ratio, it's your current asset minus inventory. All of this will be divided by current liabilities. So when you calculate this, you're gonna go to your income, to your statement of financial position. This is your current assets value, 99,000. So you are going to say 99,000 minus 30,000. So over here, we're then going to have 99,000 minus 30,000. All of this will be divided by current liabilities. Current liabilities, it's 82,000. That's the current liabilities. Current liabilities, 82,000. And then you calculate. So that's going to be 99,000 minus 30,000. That's 69,000. Then 69,000 divided by 82,000. That's 0.84. And remember, there is a norm for this ratio. The norm is that it should be 1. And then for current assets, it should be 2. So it's sort of like 2 to 1, and then this one 1 to 1, where the 1 represents the liability divided by liability. And then as well, to convert to cash cannot be able to cover the current liabilities if they become due now. So if this company was to say that, or if the credit providers for this company require that we need our money now, this company current assets, including inventory, cannot actually cover the all liabilities, the current liabilities that are there, which means that we'll still be having shortage of money to cover these expenses, these liabilities. And then on the AC test ratio, if your ratio comes back, for example, here it's going to say 99,000, which is the current assets, divided by current liability, which is 82,000. So here the ratio is going to say 1 comma something. Let's just calculate it. So 1,21. So here you're going to have a ratio saying 1,21. These two ratios, they are measured in times to say that how many times can the current assets that we have cover the current liabilities we have. So on the current assets ratio, it's current assets divided by current liabilities. It's supposed to be over. It's supposed to be over 2:1. This is the norm. Even though it's above 1:1, the first thing that you can comment, if you are required to comment, is to say that the company have enough assets to cover the current liabilities because the ratio is over 1. So this means that we do have enough current assets to cover current liabilities. However, if the liabilities become due, we will only have little assets to continue the business operation because the ratio did not manage to reach the norm, which is 2 is to 1. So meaning that it's supposed to be 2 times bigger than our current liabilities. But this time around, our current assets are not even 2 times. They're just only 1 times bigger than our current liabilities. And the remainder is actually 0.21, which is less. So that would whatever will be remaining if those assets become due. But the current assets ratio does not indicate much because it's inclusive of inventory. And it is very difficult to convert inventory into cash because you actually have to sell that inventory first for you to convert it into cash. And if that product is not much into demand, therefore it will be a challenge. So that's why we then have to perform this ratio over here called the acid test ratio, which exclude inventory. It only uses trade receivable and uh, it only uses trade receivable and cash. How much cash you have and how much goods have you sold to customer on credit. So these are people who are owing you. So it's easy to actually convert that into cash because when those customers come and bought on you from credit, they actually listed something as a collateral to say if they are working, they have actually listed their salary that they are working. So you can you can go to court and then request that when they get their salary, you get to be paid whatever they owe you and you will receive that as soon as possible because they've already used the assets or they've already used something that they've bought from you. Or you can actually take whatever they've used as collateral. If they've used the house, you're allowed to take the house and sell it and then get your money, which is much easier. And then for cash, cash is already cash, so that's why we then also include the cash within the acid test ratio. So any questions on this section? Any question, guys? Any questions? No questions on the chat section. So all I will say is that you're still going to see some MCQs in your assessment. So MCQs will be based on any section, and I don't know, I don't want to just, but all I can say is that there are MCQs, which are multiple choice question, that you will be required to actually complete. So please make sure that you read and understand the topics that you're going to write on. And when you get to see the MCQs, do not rush into just quickly selecting the answer. Make sure that you put some logic into it and see if this is the correct final answer because most of them just require logic, not much of calculation or anything. So they are mostly theory. So you need to be able to know your financial statement, know your calculation for you to be able to apply them. But logic as well makes sense for you to be able to answer those correctly. Just look at them and then apply logic, and then you'll be able to get the correct answers. And the first paper that is for the S1, I don't think it's that difficult. It is very much easy for even one, like I did mention, it's very much easy for one to score a lot of percentage. And for the other topics, please practice everything that I did mention in class and you will be sorted. So since there are no questions, I will just say all the best in your assessment and we'll meet on Friday. No question, I'll just say all the best in your assessment and we'll meet on Friday. Yes. Yes, Zwane Rato, you can ask your question.
Sir, My question was actually for the previous question. Under the creditors payment schedule,
Yes.
it said that we pay the month after we've made the purchase, correct?
Yes.
So how come in the answer that we did, we paid the 118,250 in January, in December and not in January?
You mean this one over here?
Yes.
So
Because didn't we have an opening balance from the previous year?
you mean this one?
The
84.
84,000, yes.
Okay, this balance 84,000, it's what's sitting under your creditors account. So here, unfortunately, they didn't indicate for which month is this balance
The
coming from.
balance for, okay.
So for us to make assumption will actually be incorrect because the assumption will completely be incorrect and invalid. So we need to have information on which month was the credit balance coming from, or creditors balance coming from. So in this scenario, the only thing that we can be able to identify is the credit purchase for December, which is 118 to 150,000. Which we do know that since we made it in, we bought stuff in December, those stuff will actually be paid for in January.
January.
Yeah, so
Okay.
that's why I only worked with the 118 to 150.
Okay.
Unlike this one of this thing does no longer want to move. Unlike this one of debtors of 125. So with this debtors of 125, we are also given previous month debtors collection schedule. So credit sales for the previous month. So we know that this 125 will be made out of October, November, and December uncollected amounts. Yeah, so those will be the first thing that we are going to collect. But remember these balances, it just says prior year. So this means for December. And you might find that the December collection was not yet taken into account, or it was taken into account, but it was all based on a different percentage collection. And for this year, we've managed to change the percentage. But in this scenario, they didn't mention anything about these debtors, so we only work with the ones that we are normally given.
All right. Okay, thank
Yes.
you.
All right. Like I did mention, the one on your assessment, it's a complete different scenario from this one, but whatever principle we applied over here, it's going to be applied on that same scenario. So just make sure that you understand the principle of calculating the cash sales, the principle of calculating the credit sales, the principle of collecting cash from previous month and the same month that you are budgeting for. So that is the only thing that is highly important on the cash budget. Any questions or any other questions? Whatever principle we applied over here is going to be applied on that same scenario too. So just make sure that you understand the principle of Manga, do you have a question? The principle of calculating the credit sales, the principle of collecting cash from previous month and same month that you are budgeting for. So that is the only thing that is highly important in the cash budget. Do you guys have any question? Any questions?
Just pray for us, sir.
So the answer to the question is yes. The one about the scope, the answer is yes. So since there are no questions, this will be the end of our session. You'll enjoy the rest of your evening and we'll meet each other on Friday. Yes, Tokozo, do you have a question?
Okay, so we're going to have a pre-recording for this lesson because I came late. I didn't have network for the first session.
Yes, I'm going